Tax season is here. Mark your calendars and get ready to prepare your documents for a smooth filing process. Hey everyone, and welcome back to the channel. Today, we're diving into a topic that keeps many businesses and professionals on their toes: the Income Tax Audit Report due date. Understanding this deadline is absolutely crucial for compliance and avoiding penalties. So, let's break it down. Deadlines are important. Let's see what you need to check off your tax audit list. First things first, what exactly are we talking about when we say Income Tax Audit Report? This isn't just about filing your income tax return. This refers to the due date for submitting the audit report itself, usually in Form 3CD, along with other specified forms, before you even file your main income tax return. It's a critical step for a specific group of taxpayers. Here's how the audit process works. First, an audit may be triggered based on your turnover or other criteria. Next, a chartered accountant conducts the audit. Once completed, the audit report is filed, and only then can you file your income tax return. So, who does this apply to? Generally, if your business or profession crosses a certain turnover or gross receipts threshold, you're mandated to get your books audited by a chartered accountant. There are specific sections of the Income Tax Act that outline these thresholds, and they can vary depending on the nature of your income and activities. It's always best to consult with a tax professional to determine if you fall under the audit requirement. If your business or profession exceeds the specified turnover or gross receipts, you must get your accounts audited. The CA's stamp confirms your compliance with the law. Now for the million-dollar question, what is the due date? For most taxpayers who require an audit, the due date for filing the audit report is typically 1 month prior to the due date for filing their income tax return. So, if the ITR due date for audited cases is usually around the end of October, then the audit report due date would be at the end of September. However, it's vital to remember that these dates can be subject to changes or extensions announced by the tax authorities. Always double-check the official calendar for the latest due dates. Tax authorities may announce extensions, so stay updated to avoid last-minute surprises. Why is this due date so important? Missing this deadline can lead to significant consequences, including penalties can be substantial, so it's crucial to submit your audit report on time to avoid extra costs. Missing the deadline may also mean losing out on certain tax deductions, which can increase your tax liability. Interest charges can accumulate quickly if you delay, so timely compliance saves you money. My top advice for everyone subject to an income tax audit? First, always keep track of your audit deadlines and set reminders to avoid missing them. Second, maintain organized records throughout the year. Good record keeping makes audits much easier. Third, stay informed about any changes in tax laws or deadlines by following official updates. Finally, consult a qualified chartered accountant for professional guidance and peace of mind. So, to recap, the Income Tax Audit Report due date is a critical deadline, usually a month before the ITR due date for audited cases. It applies to businesses and professionals exceeding certain thresholds, and timely compliance is key to avoiding penalties. I hope this video clarified the importance of the Income Tax Audit Report due date. If you found this helpful, please hit that like button, share it with others, and don't forget to subscribe to the channel for more valuable insights into the latest tax and financial trends. Got questions or topics you'd like us to cover? Drop them in the comments below. Thanks for watching, and we'll see you in the next video. Thank you for watching. For more tips and updates on tax and finance, subscribe and check out our other videos. Stay compliant and stress-free during tax season.